Good afternoon, ladies and gentlemen. Welcome to the HEIQ General Meeting. Throughout this recorded meeting, attendees online will be in listen-only mode. I'd now like to hand over to Non-Executive Director and Chair, Esther Dale. Good afternoon.
Good afternoon. It is now 12 p.m. in London on Friday, 1st of December 2023, and I declare the meeting as open. I would like to welcome you to this general meeting of HEIQ PLC, and before we begin the formal business of the meeting, please let me introduce you my fellow board members. On the left, we have Karen Braid, a non-executive director. Also on my left, we have Xaver Hangartner, our CFO and executive director. On my right, we have Carlo Cintonze, our CEO and co-founder. And on the right, we have our company secretary, Ross Ainger, and I am Esther Dale, the chair of HEIQ PLC. I would like to welcome you, and one board member I have not introduced yet, which is Ben Burgo. He's excused himself and cannot be present here today. As the requisite quorum is present, I declare this general meeting open. Your interest and support is very much appreciated, and I'm very sorry that we have not been able to publish the full year 2022 results any earlier. As announced on 27th of April 23, HEIQ was delayed in the preparation of its 31 December 22 annual results, mainly due to our acquisitions over the last few years, the implementation of new systems, and as well as changes to processes within the organization. These changes impacted the timing of the audit work in the first year of the appointment of Deloitte as the company's auditor. As a result, trading in the company's ordinary shares was suspended from May 2nd, 2023, and the company was unable to put its accounts before the shareholders at the June general meeting. The company's audited annual reports and accounts for the financial year ending 31st of December 22 have now been published, with the suspension in trading having lifted on 31st of October 23, and the general meeting is being held so that the company can put the annual report 22 to its shareholders for approval. The board understands your concerns with the underperformance in 22, and while we expect trading conditions for our product range to continue to be challenging this year and into 24, we took highly proactive steps and made great progress in optimizing our processes and implementing of our new system. We relocated capabilities to locations with highly qualified people and have lowered our costs considerably. We are closely following market conditions to timely implement further measures if required. We restructured the HEIQ organization into 3 distinct business units with qualified responsible business unit leaders, and we have also prioritized our innovation activities. While we continue to face times of uncertainty, both politically and economically on a global scale, which have impacted many key regions of HEIQ's operations, we also see increasingly positive trends within our markets and consumer preferences to quickly adapt to more sustainable solutions, opening up opportunities for growth for HEIQ and its innovative portfolio of sustainable products. The board and management team have reassessed the overall strategy and resource allocation of the group to ensure a healthy balance between maintaining long-term growth potential of our key innovation projects, the constraints of the current market conditions for our commercial business activities, as well as being prepared to capture opportunities to gain market share once market conditions change. We thank our shareholders for their continuing support. We as a board, as well as the whole management team of HEIQ, remain committed and motivated to deliver long-term growth and value for our shareholders by bringing sustainable technologies to the market. We have now received 3 questions that have been sent in. Question 1. Are you aware of 2 other companies named Graphenix, one selling clothes, the other one Australian in similar line of business as you, must create problems? The answer is, regarding the 2 companies, although they have the same name, they have totally different areas that they are active in. We are aware of them. One of them is in textiles, using Graphenix powder in textiles. The other one is a research undertaking working with Australian universities together. So absolutely nothing to do with our Graphenix. It's again a question to Graphenix. Over 2 years ago, you spoke of an imminent JDA with Graphenix. Has this not happened, and will it actually happen in the immediate future? The answer is, yes, we do have a joint agreement, but we are bound to confidentiality and are not allowed to say any more about that. Q3, is Lycra still an active partner of HEIQ? As Lycra never mentioned your alliance. Yes, they are very much so a partner. And Carlo, maybe you can say a little bit more about the alliance, where we stand.
There is an ongoing partnership in commercializing some of our existing commercialized product lines that we have in odor control, but also in what we call natural effects, which is joint technology to recreate a Lycra effect by putting a finishing technology on top of a textile. And Lycra purchased the right to be the exclusive distributor for our new fiber HEIQ, which they can obviously execute only once we have built a larger plant, which we're estimating to be able to do within the next 2 years.
Thank you, Carlo. Now, I would like to ask in the room, are there any further questions? Yes, Mr. Plattner.
The name is David Batten. I'm a new shareholder from the acquisition of Tarmpure at the beginning of this year. I'm not technical. I'm financial management, my background, and I was instrumental in performing Tarmpure back in 2011-12 and remained a director until August 2017. So I've been out of the loop for the last 6 years, but I've sort of followed what Tarmpure has been doing since I brought a chap called Rob Collins into the business, who ran it from 2012. Everything I say here now is to do with the fact that I'd like HEIQ to succeed, HEIQ. But there are things I don't know, and my questions might appear to be a bit dim, but for example, what does HEIQ stand for? Is it an acronym for health, environment, innovation? I don't know. I haven't seen anywhere that's been explained. I haven't gone through the website in great detail. I would also like to see in the report, which I think is, in my opinion, too long, too detailed in areas that don't need to be explained to the last degree. More detail about, I learned from Deloitte that you have 14 component parts, and those 14 are listed on one page, I think page 104. But I'd like to have known a bit more other than one line, materials or something, materials innovation. I'd like to have more describing each of those companies, a couple of paragraphs on each, rather than there's an awful lot on 2022 and everything else, but nothing to describe the apart from life
Science,
materials.
yeah.
There is something about that. There is nothing really about the other companies.
May I just interrupt, because your questions cannot be heard online.
Right.
So perhaps if we go to the first question, Carlo, the name HEIQ, I think it's best heard from the co-founder.
Yeah, so the company name, the first company we created has HEIQ Materials. So HEIQ stands also for high quality, and IQ stands for intelligent materials. We are a materials innovation company, hence the name. And my co-founder, Murray Height, Height, brings the first three letters to our name. And the website at the time, 19 years ago, was free.
Okay, the second comment was regarding the annual report, that you would like to see a little clearer what our business units are about and what they're doing, and we take note of that, of course. Absolutely, we can go into that in the future in a future annual report, or when we're reporting, or in a presentation. We can absolutely go in more detail and explain that business units as well as the innovation parts.
Can I just ask, just following on that, was it the necessity to have such a heavy tome of an AGM? Were you required to comply with certain Deloitte's requirements in terms of putting everything in there? Because it is a huge document. For a company that may be complex, but shouldn't be that complex where people can't understand or can't read the whole document. I mean, it's a bit of a nonsense, I have to say.
Okay, this comment was about the annual report, who seems for our company far too big. And was it a request, or was it our wish to do that? And can it be a bit more simplified so that it's more easily readable and understandable? Xaver, may I pass that to our CFO?
Yeah, we try to keep it as lean as possible, but kind of the different sections, pieces that are in are more or less reflecting the minimum requirements for the main market where we are listed. So section 172, the remuneration report, which is quite lengthy, etc. The whole financials are just kind of as per the IFRS standards, covering all the requirements there. So yes, it's a very long report. It's a lot of work to go into to prepare it, but it's not that there is a lot of pages we could just cut out, and we have to be compliant with all the regulations and the disclosure requirements in place for the market we are in at the main market, and we try to keep it as lean as possible, but that's about the minimum disclosures we have to do.
I think the section on risk management is 8 pages. It could have been kept to the one front page, in my opinion. I have another question.
Please.
There's an awful lot in this tone, as gentleman mentioned. It's all about 22 and reference back to 21. In December 21, the share price was 93. Last year it was 55. Now it's 14p. I've seen virtually nothing about what's happened through 23 and where we're going for 24, given that we are in a difficult position, and we've had COVID, China, etc. But this report should have addressed, since we're 11 months into the year and it was written 2 months ago, should have addressed what was happening in 23 to a greater extent. there's virtually nothing there. So I don't know where, reading this report, where you stand today with the cash. Cash was 8.5 million Swiss francs a year ago. I don't know where it is today. I know you've got drawdown facilities and you've drawn 4.5 in September or something. But what happened in 23? Why is it 14p and not back to 32 or something?
Okay, there is another question regarding where we stand. What happened during 23? Why has the share price decreased so much during that time? And where do we stand with our cash?
But what's happened in 23, trading wise, quite apart from financially?
Yeah.
I can take the trading. You can take the financial.
Okay, so we will switch to Carlo for the trading.
Yeah, so the trading has been still similar to the second half of 2022. I remind you that in the first half of 2022, we actually had a good upside. So the market was still growing. While we came towards the beginning of October 2022, the markets crashed. Literally, our customer demand went down then 75%. It later stabilized at minus 40%, but the demand-driven crash persisted in the entire value chain, and the average half year of 2022 repeated in first half year 2023, and is likely to repeat also in second half year 2023. So it is not a glorious year which we are facing. The industry of our commercialized innovations has not recovered yet. The talk in the industry is that it will recover next year, but because of inventory drawdown by the big brands. Now we have heard the Fed will reduce the rates next year, so that is a good signal, which indicates that there should be a more positive consumer purchasing behavior coming up next year, which would corroborate this statement that is circulating the industry. So while this year we had to play very defensive still on everything, while maintaining our innovation potential and our disruptive technologies, by keeping investing in a very difficult environment, we expect to be ready for next year with maintained capabilities and still a very innovative portfolio that we have created, launched also in this difficult year. I remind you that we launched two major technologies, the allergen tech, and three, actually the allergen tech, the mint, and the skin tech just last week. So three major technologies that will generate business already as of next year. So that's what 23 is. A very complicated year without any fundamental change in the consumer purchasing behavior, unfortunately. And to the financials, I hand over to my colleague, Xaver.
Yeah, so maybe first comments in the annual report on current 2023 trading, they would be found mainly in the CEO statement. There, I think we also disclosed the cash as of end September, I think, in there. Currently, we have a cash balance that is in a similar range, and as you might have seen yesterday, we announced settlement with of a court case where we will receive another 2.75 million cash, or we have signed agreement to settle at 2.75 millions. So the cash balance is stable. We have seen a cash burn in the first half year, as you also have seen in the half year results reporting, and measures we have implemented on the cost side in the first half year. We're mainly focusing on stabilizing or stopping the cash drain, so that in the second half or in course of the second half year, we can operate on a basis with the current difficult and low sales level where we do not burn cash any longer, and that's what we have achieved. So we see a stabilization in regards to the cash balance or cash flows. If it's about outlook in terms of numbers for the full year or for next year and the coming years, I would like to make reference to the analyst notes that are published in the market and can accessed via the Cavendish website, and I think there should be the link to it also on our website, so that you can access these forecasts from the analysts.
As a simple shareholder who understands finance, I'm not aware until of the involvement of Cavendish and where to look for analyst reports, etc. I think my constructive criticism is for next year, we should spend more time talking about the current year, albeit you may be reporting with a set of annual accounts in June rather than October, November. And as a post-balance sheet if we have just won 2.75 million court case, that should have been reported that that's happening.
Also that was not known at the time of publication. That was just signed. So we published yesterday, and so it was good.
You may not have been able to say which way it's going to go, but it has
It's
major implications.
It's referred to in the accounts.
Yeah, it's in the
Yeah.
we.
I missed that. And that's 152 pages.
Yeah, no, it's in the
Footnote of the last page.
As a contingent asset, this was there is a disclosure, but because as the settlement was reached these days, that's also why we published yesterday, and it was not, but at the time when we published accounts, it was not the certainty of the outcome was not clear, and therefore it was only considered as a contingent asset in the notes to the financials, and not as a balance sheet position.
Okay, thank you, Xavier.
Can I
There's
ask,
another question.
Given the innovation and the pace of innovation, how much is that curtailed by the financial inflexibility within the business, and what can you do? I mean, presumably, you need to bring these to market to commercialize them, to monetize them. But it strikes me that you don't have necessarily the financial background in order to a timeliness to market. So can you just tell me how you're going to achieve that?
Okay, there is a question regarding financing our innovations. Do we have enough resources to do that, and do we do that?
I'll take this one. So that's a very good question, and that's really the core of the current times in which we are. On the one side, we have commercialized business, which still generates profits, but not enough because the market is 40% down at the moment to finance all the other innovations that we have built up as value creation events. Now, the opportunity that we have taken is to finance directly inside the innovations. So we have allocated the innovations into a dedicated subsidiary, and we have brought third-party investors, strategic investors, inside that innovation package. So we have diluted ourselves slightly inside the subsidiary. As an example, the transaction we did with Hugo Boss, where we brought 5 million of equity into the subsidiary for a dilution of 2.5%. And then again, a second transaction with the Sri Lankan-based group, MAS, where we bought another 1.5 million at the moment, with another 1 million coming for another 2.5% into the subsidiary. Thereby, we can keep pushing the project and still finance it in order to have the value creating potential maintained. The same thing we're doing or trying to do for 3 other innovation platforms that we are building up currently. They are at an earlier stage than our ionic fiber. So the financial resources they need or necessitate are not that high. And we are trying to bridge the dilution by having also grant mechanisms in place with government-based R&D projects. So we're trying to hedge our bets, maintain the capability to push these innovations forward, and when the time comes, have to find financing in order to bring them to the next level. The ionic fiber, which is the most advanced one of the new platforms that we're pushing right now, is the one that will require a great deal of attention and will require actually very large quantity of investments in capex to build the first larger manufacturing plants. Today, we have a capacity of around 100 tons per year, which is running in Austria. That's a very small plant, which can't produce at any profit if you so want. We need to move to become profitable to at least a 3,000 ton plant, which we are currently designing and planning to build in the next 18 months in Portugal. The real game changer will be then a 30,000 ton plant, where we are then talking about an investment of several hundred millions. And in order to reflect that, we must bring the customer on board with what is called offtake agreements, which are bankable. So we can then debt finance a part, grant finance another part, because the innovation that we have is of national strategic relevance for the countries where we're planning to do this, Portugal and or Morocco. And this enables us to create a financing package which is viable. But this is a big difficulty that we are facing, since the engine of cross-financing the innovation is kind of jammed because of the market. How can we keep doing it without burning too much? And that has been one of the reading keys of 2023, that we have been able to restructure. So we clearly defined our commercialized business in 3 business units with dedicated CEOs, while I have been shifting more to this challenging task of bringing money into the ventures, into the younger technology platforms, and to keep maintaining the momentum to bring them to market and scale them up. And this has worked well. We have also reduced, as you saw in the report, our SG&A costs by approximately 15% without losing capabilities. So we have mainly taken people from high salary countries like Switzerland and transferred the capabilities to a younger team in Portugal. That has worked during the first half of 23, and has been one of the major movements in order to counterbalance this deficiency from sales driven by high inventory from our brand customers, and also a sagging consumer demand over the last year.
Is there any more low-hanging costs that you can take out of the business, or are you
Are there any more low-hanging costs that we can take out of the business? That was another question.
The low-hanging ones we've taken. The next ones that if we have to take more, the next ones will dent into our capabilities, which means we will not be ready when the market recovers to take advantage of other peers that have scuppered their capabilities much more. It's a very fine balance. We're walking this balance. If you want, the strategy of the leadership team is defense and offense at the same time, which is a hard game to play.
Can I just ask another
Okay,
question?
there are more questions in the room. Go ahead.
Just going back to the ionic situation, what I'd be very keen to understand is how other conversations have been taking place with other potential interested parties since the Hugo Boss took that stake, which obviously was something that certainly opened my eyes up to the HEIQ group, Is there a pipeline conversations that are waiting on something, or is there a
The-
key KPI that needs to be reached? Or I think at the time you said you wanted to sell 25% of that business.
The other question is regarding other partners that would join after Hugo Boss. What is the status there? And who would participate in the Ionic project?
Yeah. So yes, there is of course a pipeline which we have been working up, mainly with larger brands than Hugo Boss. The second investor, MAS, is the largest garment maker in South Asia with 150,000 people and almost 3 billion turnover. And they are the main manufacturer for Nike, Lululemon, Patagonia, Victoria's Secret, Speedo, and some others. And obviously they are proposing our sustainable fiber to all these parties. And we ourselves are talking to other giants in fast fashion, whereas we do face at this moment a big difficulty to raise small tickets in financing, even in our subsidiary. Let's say that the suspension has not helped the negotiation. Definitely not. Has been actually preventing or stopping them. So we had to address that first. And that has been a downside of 6 months that we had to take into account in the execution of our strategy. The on a good note is that while the small tickets investments are difficult, we still believe that offtake agreements are feasible. They do take obviously product validation by the teams of all these companies, so that they can commit to, this is the quality I want, this is the price I'm ready to pay, and this is the commitment I'm willing to give you. So that is complex negotiations which we are carrying on, and will hopefully be able to conclude in 2020, in the course of 2024. This said, it would be much easier to raise a larger amount of money. That is still accessible. We're talking about hundreds of millions. That is possible, but in order to do it, we do need the offtakes first.
Thank you, Carlo. There is, yes,
Is the company,
one more question.
is the company like to get back into China in a real sense? Well, I'm not sure how big a percentage it was of the business.
A third.
A third.
The question was, are we going back into China? And how big was the business? And Carlo answered by saying it's about a third.
Exactly. So China is still the biggest market for textiles in the world. So our commercialized business has 60% in textiles and another 15% in polymers, plastics, and so on. And for both of that, more than 50% of the market is in China. So China is a very important industry space for us still, with all the difficulties that we are facing at the moment. Although there's starting to be relaxation between China and the US, which is helping the business climate. However, it has been a very difficult market for the last couple of years. We did change CEO in China recently, appointed Mr. Liu instead of Ms. Wang. And we're seeing a clearer focus on accounts that we have there. We expect the business will grow back and that we can bring more technology proposals into China, or even directly manufacture inside China some of our lower tech technologies by moving into tolling agreements. So it remains a very important market. We still think China will be a third of our commercialized business sales going forward. And we have a team which is short of 20 people strong, still in China, to build up and serve the market, and also work with local Chinese brands to bring the next level of innovation to Chinese consumers.
Currently, it's some way short of 1/3.
Currently, probably 20%. Yeah,
Opposed to 33.
Yeah, we took a hit on our sales in China, and the market has gone down significantly. So they have suffered very much from the low orders from brands. Many of our customers are running at 50% capacity. So that's the reality in China.
Thank you.
I've just got one more. Sorry.
Okay, one more question.
A lot of the commentaries all about the future. The markets are not very giving in terms of the uncertainty of what the future really means. Hypothetically, if we look forward to 24 and 25, can you just give a little, if you were, I mean, what's the roadmap?
The question is that there's not a lot of information regarding the future 23, 24, seeing, you know, how difficult the environment is. But do we basically see a direction we're going in, and what's the roadmap?
Okay, I'll take that.
Carlo?
So again, we're offense and defense. I come back to those words. That's the game we're playing at the moment. Yes, everybody's assuming 2024 will be better than 2023 at our customer base. But we've all learned that it's unpredictable. So we will stay and maintain our defensive approach in place. We have focused our offensive strategies on a few of our commercialized and venture platforms. On the commercialized, we're very much pushing our probiotic approach, the Symbio, which we acquired 2 years back. We've done a very strong work on the regulatory side. So the regulatory, I'm happy to inform you, will be enacted at level of European Commission in March next year, including microbial probiotic cleaning agents. This opens up the market in full. We have the major cleaners fair in April, the Interclean, and we do expect to have a very high level of attention from the large players in the industry on our position. We're the most data strong company with a strong change in regulation. So this has been a long work. Regulatory changes take a lot of effort. We have succeeded in them by generating unrefutable data. I remind you, the Charité Hospital of Berlin conducted a study, an independent study, comparing our technology, our Symbio, to Ecolab disinfectants, and found out that we perform at least as well without creating any resistances of bacteria. This study has been read by the Robert Koch Institute, which has then published a guideline for the German hospitals to adopt and utilize probiotic cleaners because they are much less harmful and much safer, and reduce the risk of resistance development. Both these have led the Lancet, which is probably the Nobel Prize for a small company to win, to publish an article about our technology. And that article has been read by a lot of hygienists in hospitals and has also convinced the European Union to change the regulation. So it's stepping stones, and each one takes a lot of time, but we've done a very diligent work to build up to the momentum, to that change, and are now ready next year to capture the fruits of a lot of hard work from the teams that have been involved in that.
Thank you, Carlo. Are there any more questions?
I have one more, sorry.
Yes, that's okay. We have time for one more.
Could you just comment, if you can, give any extra colour as to the recent share sale from Amati to, is it Darren Morgan, who's now, I think, got a...
Close to that, yeah.
Yeah. I mean, just tell me a bit more about him and his capacity, his relationship to the company, his relationship to you. You know, why he didn't take the whole lot. Blah, blah, blah. I've got that floating around inside my head.
I can take that. As far as I know,
hang on, we have to repeat the question because we're not equipped to for people online to hear the questions. So the question was, what about the shares that Darren Morecambe bought, and what is our relationship to the company? And Carlo Centonce will answer that.
Okay. So first of all, Amati has most likely, but I can't confirm that internal rules where our current valuation doesn't allow them to maintain the full investment. This is something you would have to ask Amati directly, but that has probably led to them seeing a partial liquidation of their holding in our stock that was necessary according to their internal regulations. Mr. Morecambe has been investing in the company for years. He was advising us during the reverse takeover and listing in London, and he's invested in several companies around the world. So that's his profession, and he engages normally in rather large stakes. So he's today, after myself, our second biggest investor that we have on the ledger, and we look forward to working with him in the future.
Do we know the price?
No, we don't know.
Okay, thank you, Carlo. Now it's time to come to our business of the general meeting. I hope that all these answers have, satisfied your need for information. And of course, you're always welcome to ask us more questions via email or our website. But we would like now to come to the business of the general meeting. And the resolutions set out in notice 1 and 2 are taken as read and will therefore not be read out in full. Resolution 1 and 2 are both proposed as ordinary resolutions and require a simple majority to be passed. In the notice of the shareholder, so it was pointed out that the board considers that the resolutions will promote the success of the company and are in the best interest of the company and its shareholders. The directors unanimously recommend to the shareholders to vote in favour of Resolution 1 and 2, as they intend to do so in respect with their own beneficial shareholdings. As results of votes received in advance, where I think, Ross, we're not necessarily going to mention those now because people have voted today as well. So if somebody in this room would still like to vote today, this will be done by way of a poll on each of the resolutions put to the meeting. This gives all shareholders the opportunity to participate in the decision-making of the company and have their votes recorded in proportion of the number of shares they hold. You have 3 options for each resolution. You can vote for the proposed resolution against the proposed resolution, or you may withhold your vote. A vote withheld is not a vote in law and will not be counted in the calculation of the proportion of the votes for or against the resolution. Will you please complete your poll card, if you do still want to vote, by ticking the appropriate box next to the relevant resolution, depending on how you wish to cast your vote. Once all votes have been taken on the resolutions, please would you sign the poll card and hand your card to our company secretary. Resolution 1 is to receive the accounts and the reports of the directors and auditors for the year ended 31st of December 2022. Votes have already been noted. Ross?
Yes, so we will confirm the final numbers via a market announcement shortly after the meeting.
Okay. And the resolution 2 is to approve the director's remuneration report in the form set out in the company's annual report and accounts for the year ended 31st of December 2022. So the final results will be announced by RNS, as Ross said, and placed on the company's website. And that will conclude the business of our general meeting. On the board of directors of HEIQ, I thank you for your confidence in the board and for attending the meeting today. Thank you very much. And
That's
I will
great.
close the meeting.
That's great. To the board of HEIQ, thank you very much indeed for updating attendees today. Could I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This may take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team and the board of HEIQ, we'd like to thank you for attending today's meeting. Good afternoon to you all.